Thanks for tuning into today's Talking Point. I'm Neeraj Shah, and our guest today is Ajay Argal of Franklin Templeton. And the conversation has to center around the kind of optimism that certainly seems to have come back into the Indian markets despite arguably higher valuations. The geopolitics surrounding what's happening to oil, maybe even G20, so on, and newer initiatives out there, and just the broader optimism around the SMIDs, despite the fact that the valuations out there seem to be high. Ajay, great having you. Thanks for taking the time out.
Thank you, Neeraj. Thanks for having me here.
No, the pleasure is ours. Ajay, as a portfolio manager, how do you feel about the current market mood? Because the arguments around expensive valuation in select pockets has been there now for the past 2-3 months, and we've still seen smart outperformance from a bunch of sectors out there, if not in the large cap end, in the mid cap end. And last week, even the large caps have now started to participate.
Yeah, that's true. So it's always a balance between the long term versus short term. So as you rightly highlighted, the long term story is very solid in terms of our demographics, in terms of our growth possibilities, in terms of the penetration levels, which are low, whether we look at any financial penetration or any kind of consumer consumption kind of penetration. So that's the reason that we continue to grow at a pace which is much faster than any of the other large economies in the world. And India has become a large economy as well as a large stock market, like both in upwards of $3 trillion. So it's kind of a market which any global investor cannot ignore, and that is why you continue to see a very positive kind of sentiment towards India. And on the other hand, if you look at the short term, as you have been highlighting, the valuations are definitely not on the cheap side. But you have to keep in mind that the India valuations always trade at a premium to the emerging market valuations. And there is a very strong reason for that because we continue to grow, as I highlighted. And in top of that, our return on equities is generally much more superior to all the other emerging markets. So it's a good balance, but at the same time, short term maybe we are not so cheap, and so there is a possibility that there could be a pause. So as an investor, one should have a kind of a lower expectation compared to what we had in the last 2 or 3 years, especially post COVID. And it could either come in correction over the next few months, or it can be sideways movement like what we have seen in the last 2 years, so kind of a time correction. But the point is, in the near term, you might have lower returns compared to the recent past, but longer term, because of the growth which we have, the return should be quite attractive.
There are two arguments that come up in a conversation like this when this point is raised, Ajay, and they've come up in the last few conversations that I've had, that even if the market is sideways, there'll be pockets of outperformance because there are a bunch of sectors and themes out there that are not that expensively valued. We started last week, for example, Coal India, L&T, HDFC Bank, all moving up. So we've seen some of the stocks which had not participated at large cap and do well. Part two of that argument is also that while mid caps and small caps have had a really good run the last 2.5 months, maybe they paused, but the large caps could still continue to do okay. What is your comment on both of these?
Oh, absolutely. I totally agree with you. So you've basically kind of outlined the job which we have,
Okay.
which is to identify those kind of stocks and sectors where we still see opportunities, sometimes from a tactical perspective, even in the short term. But generally, our portfolios are like towards sustainable growth compounders. So you're absolutely right. I mean, in any kind of market, there are always opportunities, and a handful of opportunities is always possible. So, for example, I run a strategy which is a focus fund, so where we just need to have 30 good stocks. So there is always a possibility that a handful of stocks you can find out which are still attractive, even in these kind of valuations in a very broad market, as you highlighted some of the themes which were recently attractive, and on an ongoing basis, always there is a bit of a kind of rotation in the market. You get opportunities. So that's our basically the job which we have rightly highlighted, that there will always be pockets of opportunity. That's the attraction of the active strategies that we will be able to do, or at least we have the potential to do. That is the primary attraction, and so that's what is the exciting part. That India is such a large market; they always get opportunities to get good returns in a few stocks, even though the markets may not be so attractive in the very near term.
There is almost a frenzy for PSU names in select pockets, if not everywhere. But it's almost as if the market now believes that this time is different. We've seen those railway PSUs do better at times than the railway privates, if you will. But it's also in other pockets wherein you've seen this PSU move come in. One, did you have did you go out and buy into any of these at any point of time in the last 6 to 12 to 18 months? Part one of my question. And what is your comment on the kind of moves that some of these stocks are making? Is it long only real money that would be chasing some of these, because the gains are outsized and happen almost every single day?
Yeah, so that's right. And to your question of whether we have participated, we do have participated in some of these stocks. But it's very difficult to make a general statement whether it is only long onlys or whether it is retail investors who are getting into that. The point is, at various points in time, you get opportunities, and even in these public sector stocks which you are talking about, there has been fundamental changes which the government has done. In terms of in some cases, let's say in defense sector, they are kind of focused on getting more manufacturing done in India, and therefore the public sector companies in that sector get much more opportunities compared to what they used to get in the past, and therefore their business has improved, and that deserves a better valuation or a kind of re-rating, and that is what the market is kind of highlighting and participating in that. So to some extent, just like in any rally, to some extent there is a case for that. And when things really get very positive, then obviously we have seen in the markets that the theme is sometimes played to the extent that it is not deserved in the short term. But all these things actually get evened out in the long term. So our objective is to try to get into stocks and themes where we still see some kind of return left, and which is driven by fundamentals. Because at the in the euphoria level, at the peak of the cycle, sometimes the sentiments take over and they override the fundamentals. So our objective is to try to differentiate between the two and get into the stocks which can be fundamentally justified in terms of valuations. So there are opportunities, as you highlighted, but one needs to be cautious because, again, as you highlighted, some of that has been very euphoric.
Have you made some switches, Ajay, in the recent past? Maybe some winners where you yourself said that in certain cases sentiment might override valuations, and therefore you got to be cognizant of that. Have you been compelled to make some switches of late?
Yeah, so that is, as I said, that is part of our daily job. As again I highlighted earlier, that we typically have more focus on sustainable growth compounders. So our turnover ratio is typically 25 to 30%, which means our holding period is between 3 to 4 years. So a lot of the portfolio is for the long term, but definitely we want to be a bit tactical as well. So maybe about 10-15% of the portfolio we are looking even for shorter term opportunities, and in that bucket we keep on trying to get into stocks where there is some kind of near term event which has happened and which has given us an opportunity to enter at a better point. And sometimes, on the other hand, the stocks which are holding have run off too much for the time being. So we would like to maybe reduce the weightage there and get into something else, or maybe sometimes even completely exit and then revisit them later. So that's a continuous process, and we have done that in the last few months as well.
What would these be? I'm just trying to understand. Where is it that you found discomfort on valuations or sentiment overtaking and justifiable
So,
valuations? And what
more
did you
than
get into then?
yeah. So more than discomfort, it is the other stocks which we want to get into look better from a relative valuation perspective. So we have been doing that across. So maybe some in consumer discretionary, bit in the broad BFSI sector. So it's all across sectors. I mean, it's not very sector specific. Wherever we get stock specific opportunities. So our focus is more bottom up. Though we definitely try to lay a bit of top down in terms of trying to get the sector and themes which are showing good growth opportunities or which have the potential of good growth opportunities over the next, let's say, 2-3 years. But we primarily focus on individual stock opportunities, and therefore you will see all these kind of portfolio changes across the sector.
There seems to be a near consensus, and I'm just trying to get the thematic conversation done, and then I want to pick your brains on some risks looming in the horizon as well, Ajay, global, macro, and micro. But since we are on this topic, there seems to be a near consensus on some of the large private sector banks not having run up and there being value there. But despite almost everybody in that camp, these stocks haven't really moved, save for a couple of days last week. What's happening there?
Yeah, so it's again, I would say, a part of the rotation. So we have seen that the banking stocks did very well last year, and then for some period, even during this year. Currently, the market concern is that there is a possibility of the margins kind of coming down, which some think that it's a change in the margins. But we look more at as the normalization of margins because it was just a timing issue in terms of the assets getting priced higher earlier, and now the liabilities are getting priced because of the very nature of the liabilities, which are over a longer 12 to 18-month period. So because of that, the margins looked higher, and they were abnormally higher in some cases in some of the private sector banks, and they are getting normalized. So markets are always focused on the short term. So in the short term, they see in the next 1 or 2 quarters that the margins may come down compared to what it was in the previous 1 or 2 quarters, and that's why the stocks have been kind of languishing. But from our perspective, we find the opportunity in the banking sector very attractive. As I highlighted at the beginning of the talk, this is one of the sectors where the penetration is very low. The financial penetration is one of the lowest anywhere in the world. And on top of that, we are seeing that the private sector banks continue to gain market share both in assets and liabilities. So that's a very structural theme which we have been playing for the last few years. I think there is still room there. And also, in addition, we are seeing that the asset quality cycle is very benign because we are at a very good asset quality levels in terms of the non-performing ratios being the lowest. And because there has been no credit binge in the last few years, it is very unlikely that the credit quality will deteriorate, at least for the next few quarters. And again, in addition, we have the valuations. It is one of the only sectors where the valuations are still lower than the last 5 or 10-year averages or medians. So this combination we like very much, and that is why you would see across our portfolios, we continue to hold a very large weightage in the banking sector, in spite of, as you rightly highlighted, that in the shorter term, there has been a bit of underperformance. But we have seen that even in the past that always there are periods where it underperforms, but because of the very nature of the structural growth opportunities, we remain positive on this sector.
Got it. One last thematic question, Ajay, before we move or switch tracks. In any of the pockets that have had a sharp run in the recent times, maybe because the market took a fancy, or maybe there's a discovery of some potential or earnings delivery, in any of those pockets, do you feel that there is, or have you felt that there is merit in having an overweight despite the run up because of the promise or because of the earnings growth guided by the company, or that the sector itself looks very promising? Anything which is on that lines?
Yeah, sure. So there are always things like that because you are continuously assessing the the growth opportunities of the company, and for that growth opportunities, what is the valuation you're willing to pay. So we have seen that in certain pockets there has been an improvement, and you make an assessment of the improvement, that the kind of improvement which you are envisaging, it is already there in the stock price, or there is still room. And obviously it is an art, and it is about the future, so you will not get all the calls right. So sometimes it's better to acknowledge your thing which you have missed out, and if there is still steam left in terms of the growth opportunities, and the profitability is improving, let's say in some of the cases, then it makes sense to get into even at a higher price. But generally, you will see that across our portfolios, that will not be a very large weightage. But at the same time, we want to be flexible, and be clear in our mind that if things are changing, we would also need to change along with that,
Sure.
and try to participate. If the
Sure.
particular stocks or themes, they've done better than what we had envisaged.
No, but what I was just getting to was that I know you can't talk specific stocks, but what themes are some of these businesses in wherein you have felt the comfort to stay invested despite a sharp run up?
Yeah, so I mean, you can, just to give an example, maybe the internet related stocks, where we have seen that now there is a much more focus on profitability. And earlier it was not clear that the profitability is going to come in what time frame, whereas in the last 1 or 2 quarters, most of the leading internet listed stocks in India have demonstrated a much more sharper focus on profitability, which gives us the confidence that some of these valuations could continue, and the growth opportunities are still there. So this is one of the pockets where we feel a bit more comfortable than we were a few months back.
Great. Ajay, what are the risks looming on the horizon? I know excessive valuations or sharp uptick in that valuations could be one, but beyond that?
Yeah, so a couple of risks. One is obviously the global interest rates. So the jury is still out that when will the interest rates kind of peak out, and then the US Fed especially starts cutting the rates. And so there is certain expectations which keep moving. Right now the expectations have moved to maybe sometime in the March to June kind of time frame next year, in terms of the rate cuts to begin in the US. And the important thing is the interest rates, do they stay here, and if they are cut, are they getting cut to the levels which we had seen basically in the last 10 years, which was very close to zero, or it might settle somewhere in between. And the reason it is important is basically because that is the price, or that is the discounting factor which is used for cash flows across the globe. I mean, that's the benchmark. In India, you will put a kind of a risk premium over that. So if that level kinds of settles at a higher level, then the valuations which we had seen in the last 10 years, is it the right benchmark, or we need to adjust that? So that is the primary risk in the global markets. And on top of that, in terms of the interest rate differential between India and US, we are kind of one of the lowest in the last many years. And as your viewers would be familiar, if the interest rate differential gets too less, then it kind of puts a pressure on the currency, and then currency is kind of important for our other risk as well, which is oil. So oil, we have seen so far, in spite of the war between Russia and Ukraine, things have been manageable, because we have been able to get crude at a discount from Russia. So now the crude have started moving. So again, what kind of movement, and where does it settle, and to that extent, what is an impact on the current account deficit? So far, all these things look manageable, but these are some of the risks one should be cognizant of and continuously tracking to get a sense of what could be the impact on the global markets as well as the Indian stock markets.
Got it. Ajay, my final question. As the G20 concluded, a couple of large announcements came out, aside of course, a lot of other geopolitical announcements, was the Global Biofuels Alliance launch, or the corridor with India, UAE, Saudi Arabia, certain European countries, so on and so forth, shipping and rail corridor. Now, these are, of course, large motherhood statements. A lot goes beyond that as well, but we can see visibly the market being excited by the prospects of something like this, and maybe rightly so. I'm trying to understand, when you hear such things, how do you think about the possibilities and the implications of moves like these, and what could potentially happen to companies which are operating in this space or these spaces?
Yeah, so it is definitely a positive. The thing is, these kind of things need to continue to happen on a regular basis, and which is what has been happening in the last, few years, definitely. And on top of that, we have seen specific policies by the government, whether it is PLI or more focus on getting some of the domestic manufacturing, where we used to be more dependent on imports. So, as you rightly highlighted, these are mother statements, but these are statements of intention.
Yes.
And then they obviously get kind of fructified, and then you come up with more concrete policies in that regard. So, all these policies you have to think in terms of a holistic perspective. They kind of act as an ignition. So, whether we look at PLI or some of the initiatives the government has taken in terms of made in India,
No,
or
Ajay,
getting the
Ajay,
domestic
sorry,
manufacturing.
Ajay, if
Yeah.
you allow me to
Yeah.
interrupt, sorry. What I meant by motherhood was not in a negative way, in a positive way, in the sense that this is
Yeah.
an umbrella statement, and then things could happen. Let me
So that's what
recap
I'm
myself.
saying. I am in total agreement with you. So I was highlighting that all these things are the ignition. So that then kind of makes the corporates to think that whether it is time to go for capacity expansions, for example, in certain areas where the capacities are hitting limits. Because we have seen in the last few years, the corporates have been very cautious. They have restructured their balance sheet very aggressively. They are in good shape. But they are not so confident about the demand scenario, because we have seen in certain sectors that the volume growth has not been so good, and maybe some weakness we have seen in the rural economy. So the point I was trying to make is absolutely in agreement with what you're saying, that all these things helps in ignite the kind of so-called animal spirits of the corporate sector, so that then they kind of start looking at in a very business perspective, and go for expansions. And similarly, when this flows down to the economy, the income levels rise, the employment rises, the disposable income rises, which then generates demand, and so on. So I'm in agreement with you that all this is very positive, but it needs to be followed with the specific policy initiatives which the government has been doing, and we remain confident that it will continue to be the case in future.
Got it. Ajay, thank you. Thank you for your time today and for your answers to a lot of portfolio related questions, and as also highlighting those risks which are very important to keep in mind. Much appreciate your time today.
Thank you, Neeraj. Thank you for having me here.
The pleasure was ours, and viewers, thanks for tuning in.